Hello everyone, welcome back to the channel. Today we're going to be talking about put credit spreads. There's almost no better strategy that I can teach you guys to grow a small portfolio than utilizing the put credit spread strategy. This strategy helps you get big returns, it's not very high risk, and it's very high reward. So I believe it's a mixture of all of the best things that options has to offer, and today I'm going to show you how to open, how to close. I'm not going to leave you hanging because a lot of different people can show you how to open up a put credit spread. However, I'm going to give you the full walkthrough, the full process, make it very easy for you, and show you how I think about closing the trade because not many people cover that. Now, there's also call credit spreads. I covered that yesterday. It's a must check out, and I'm going to recommend that you watch my small account playlist here on YouTube. I'm going to link it in the description, or if you make it to the end of the video, that playlist is going to help you make some more of those green soldiers and make you stupid rich. I'm going to be showing you guys an example using Palantir stock, but I quickly want to show you guys that you do need to have level 3 option trading enabled in your Robinhood accounts or whatever brokerage that you're using, whether it's Webull. The very basics are buying calls and puts, which, by the way, I have a playlist for call options and put options here on YouTube as well. So basically, if you're ready to invest some time, you're gonna learn how to make a lot of money. So basically, if you're willing to invest some time, well, you already know that you're probably gonna be seeing a lot of results by subscribing to the channel and watching my playlist. To do a put credit spread though, you're gonna need to have buying and selling spreads here activated, and that's gonna require level 3 trading. All right, so now I have Palantir stock open in front of me, and believe it or not, put credit spreads are gonna be fantastic on many different stocks, whether it's a cheaper stock, whether it's a medium price stock like Palantir, which I'm going to be using today at about $20, or even the more expensive stocks. You can use a put credit spread on Amazon, on Apple. You can find a stock like Facebook. Any of these high price stocks, in fact, are fantastic opportunities to use put credit spreads because most people are not going to be able to afford 100 shares to do a covered call or sell a put. So in fact, using put credit spreads is going to give you exposure into the stock and make you those green soldiers on an expensive stock. All right, now real quick, check out the chart right here because I do want to discuss the Palantir technical chart here because that's going to be very important into going into my assumptions, because when I go ahead and pick a strike price, when I go ahead and look at the delta of the options that I'm going to be opening, it's going to be important to reference this chart because you guys need to understand what strikes to pick. A lot of people can just go ahead and open up a put credit spread, but the real secret is picking the correct strikes and the correct date of expiration. Now, real simple, this is the easiest way to make money. Palantir stock has fallen down. This stock, if you look at the 6-month chart, I mean, it has had a lot of gyrations. This stock has gone up, it has gone down, it has consolidated and traded sideways. Then again, it had a big momentum push from this date right here of August 10th up to about September 23rd. Those 5 weeks right there, it was a huge momentum spike upwards. Then again, we see a pattern forming with Palantir stock. It has a huge sell-off. It happens pretty fast. And then again, a run-up and then a huge sell-off. Now, this pattern is common in some stocks, and it's pretty much the easiest way to take advantage of a stock using options. Now that Palantir is low, there's only a few things that can really happen. In my opinion, this stock can trade sideways, right, and consolidate, which you're going to want to use iron condors on. I have a video on that. Or this stock can actually blow back up because investors will realize that they have sold this stock way too much. If you take a look at the volume, there's a red day, another red day, small green day, followed by a red day, small green day, and then multiple red days. Now, taking a look at the RSI right here, it is currently sitting at 30. That's very oversold. That's getting into that oversold territory. I mean, 20 would technically be oversold, but I haven't seen 30 for a very long time, especially in our current market environment. We're in a bull market. I've seen so many stocks right here around the 80 range. To see a stock around the 30 range, this signals to me that this stock has been sold off quite heavily, and I can only see two things happening again: it either going sideways or rising up, which is going to be important because the put credit spread is one of the best strategies that you can utilize, because honestly, you can make a very big return if the stock rises, if the stock moves sideways, and believe it or not, you can even make money if the stock pulls back. This is a hard to lose strategy. That's why I love it so much. This is why I teach my students in the private Discord about put credit spreads, because it has all of the characteristics to growing a small portfolio fast without taking as much risk as other strategies out there. If you notice right here, the bottom of the Bollinger Band, this orange right here, I always have a Bollinger Band set up. This gives me a good understanding of where a stock is likely to trade within. If you want to think about it as a range, that stock will stay within that range given 95% of the time in my assumption right here. If you want to be even more safe, of course, you can turn the standard deviation into 3. Now that will give you a certainty from 95 into about 99%. As you guys see right here, the Bollinger Band has opened up. However, I don't want to be that aggressive because I already think that Palantir is a very good deal. This is a stock I'm bullish on, and I don't see it falling less than $20 per share. So I'm going to bake that into my assumptions when we go ahead and go back to Robinhood right here. I'm going to show you the full mechanics of opening up a put credit spread and how to also close it. Now, real quick, guys, I do send out option strategies over email. I do want you guys to sign up for that email list because not only am I sending option strategies, I have a newsletter, and I'm also going to have a lot of stuff coming up for the holidays. I have discounts, I have future programs that will be coming out. So I really want you guys to sign up for that email list because I'm planning to give you guys a lot of value over email. There's no way I can grow this option coaching business unless I give you guys 10 times the value that I receive myself. Now, I'm also going to be sharing some of the Discord trades. I quickly wanted to put up this put credit spread because I want to show you guys the power that put credit spreads have. You know, you can actually make $11,540 on this specific trade right here with Tesla. I sold a put credit spread. I opened this up for $1,000 per spread. I opened up 30 of these. So sure, I spent $30,000. However, even spending just $3,000 and having 1/10 of the position that I have, this trade would have made over $1,000. So put credit spreads certainly have a lot of power. All right, so step number 1, I'm going to click trade PLTR options. Now what I'm going to do is a put credit spread, as the name implies, involves puts. So click put, click sell. I like to start off with sell because that is the closer to the money leg, okay? Because I'm selling a put option first, and that's going to be closer to the money, and then the second mechanism is going to be buying a put option, the sell put option is going to be closer. Therefore, I place a little bit more importance on the sell put. It doesn't really matter whether you want to buy or sell first. However, it's easier for me, and I think it's easier for students to understand, selling the put option first. Now, looking at the expiration date, I have said many times on the channel, and I teach students to go for weekly options or bi-weekly options. And at a maximum, it's also okay to go for monthly options. There's nothing wrong with that. However, when you go out too far in terms of expiration date, too many things can happen. There could be an earnings event. There could be a catalyst. The stock could tremendously pull back and have a shift of momentum. Therefore, I don't like to put myself or students in positions where a lot of stuff can happen in a long period of time. I like to keep things short and concise and continuously profit week after week. Clicking December 10th right here, I'm going to take a look at the option chain. Now, again, looking at Palantir's chart, I don't really expect it to go below $20 per share. So I'm going to open up a put option at $20. Now, I do want to quickly expand this. I want to show you guys the delta. The delta is 0.37. It's not as low as some of the trades that I usually do. Having a lower delta when you're selling options is beneficial because a delta will tell you how likely the option will expire in the money. 37 is a little bit high. It's not that low, but again, I'm going aggressive with this trade. I'm not a financial advisor, so you want to do your own research. However, for me, this is a trade that makes sense. You don't have to follow it. Pick a stock that you think makes sense for you, that you don't think can pull back any further, and use this strategy. Basically copy and paste and clone the strategies that are successful for me because I want you to be successful as well. So the 20 strike price is what I'm going to be opening up. It's near the money and it's about 80 cents away, or about $80 for 100 shares. Again, each option contract is worth 100 shares. So going right here, I'm going to sell this 66 cents, or basically $66. I'm going to, make sure that I'm selling a put option. I can't tell you guys how many times I've seen students basically buy a put option and open up the position incorrectly. It's sell put 20. So I'm going to open that up. Now what I'm going to do is I'm going to buy the next leg lower. I'm going to open up a spread. So clicking buy, I could open up the 19.5. I'm going to go a leg lower down to 19. That's because I like to see nice even spreads. I like to see about $100, $300, $500. It just makes it easier for me to understand in my head. I don't want to see a spread that's $50. And also that's just a very tight spread. I mean, putting $50 on the line is totally fine if you have a small portfolio. However, I do like those nice round numbers of 100, 300, 500. And oftentimes in my, bigger portfolio, I am trading $1,000 spreads, and those do really well, just like $100 spread will do really well. that I'm gonna open up right now. So buy put option, 19 strike. Again, if I look at the delta here, it's actually gonna be 23. So that's pretty good. You can see that the deltas are decreasing as you get further out of the money. So I'm gonna open this up right now. So I'm gonna be buying the 35. And you will notice right now, and I'm gonna go over these couple of things right here, total credit. So you're going to be collecting a total credit of $31. Now, collecting $31 might not seem a lot until you realize right here that you're collecting $32 and your max risk is $68. So although your max profit is lower than your max loss, your chances of actually losing on this trade are pretty slim considering that the delta is 37. So again, 37% chance that this will happen. But in fact, when I look at the chart, it doesn't really make sense to me that the delta is 37. You see, from one perspective, the delta has to be 37 because options are based on the Black-Scholes model. It's just going to be based on a financial model that's out there in the financial market. However, combining financial markets with technical analysis, it is not going to be that risky. I can't tell you guys how often I have opened up riskier spreads that have been way more successful than the delta would imply because I'm coupling the delta and the statistics with the charting, okay? I'm using charting analysis. So for me, although I'm collecting $32, I'm risking 68. Not only does the delta basically make this an even money trade, which most option trades are, for me, this is going to be a positive expected profit trade because I'm using technical analysis and I'm using the experience that I have that I learned from Goldman Sachs and the different hedge funds that I have, and as well as the finance degree that I have. In my experience, this has been very successful. Now, I can't tell you that this exact spread is going to work out, and I'm sure of it. However, I am sure that running a strategy like this is going to pay off in the long term. It's all about long term. You can't win a single poker hand. However, you can gain an edge on the poker table if you're playing 10,000 hands and you're a very skilled poker player. All right, so taking a look at the total credit, it's $31. So on a $68 max loss, this is going to be about a 50% return in a couple weeks, okay? So this is basically 2 weeks and you're making 50%. So tell me how you can't grow a small accounts when you're making 50% in 2 weeks. Again, you're not going to win on every single trade. However, if you win on more trades than not, you're going to aggressively grow your portfolio. So the risk is $68 and the maximum profit is $32. Now, going over my assumptions and closing this spread profitably and consistently, basically the assumption is that Palantir stock will not fall below $20. If Palantir were to fall below $20, you will start to lose money between this range right here, okay? This is the maximum amount you gain. In between $20 and $19.68, your profit will start to decline, okay? During these 2 points, your profit declines, and then below $19.68, you have started to lose money, okay? You will start to slowly lose money as the stock declines, and below $19, you cannot lose any more money. Your max loss has occurred at negative $68. So for me, this is a very interesting strategy. Palantir's price right now is $20.73. It's right in the middle of this green profit area right here. So Palantir would really have to decline for you to start seeing losses. And keep in mind, Palantir has not really traded below this level in a long time. Now I'm going to talk about closing this trade. This is one of the most important things that I really think makes the difference between a profitable option trader and not a profitable option trader. So closing this spread will most likely involve you closing this position on Friday of expiration on December 10th, okay? I like to personally close trades on Fridays. I don't want to see any crazy things happening like Robinhood closing my position and potentially robbing me, or, you know, closing that position for more than it's worth. I want to close this position as cheaply as possible on expiration date. Usually that's going to be 1 cent or maybe 2 cents, which will translate into $1 or $2 if the trade went in your favor. Now, if it didn't go in your favor, I would close that trade anyways because you have a risk of being assigned. If the stock were to end between $20 and $19, now you have some assignment risk, you have some pin risk. I really wouldn't put yourself in that position. That's a whole topic for another video. I would simply just close this position as you approach December 10th. You can even close it on December 9th, the day before if you want to be extra safe, or in the morning during trading hours on December 10th, or whatever date that you picked for your expiration date. On the Friday of expiration, it makes the most sense to close the trade out. Now, another thing that you guys need to know to be a more profitable trader is you can actually go ahead and set a stop loss limit, okay? So if this trade goes against you, you can set a stop loss where you say, hey, you know, I don't want to lose the full $68. At $50, I'm out. If I'm losing $50, then I don't want to be in this trade anymore. You can totally set that in. All you really have to do is your max profit is 32. You only want to lose 50 bucks. So you can set a stop loss that if this spread were to lose $82 out of the total 100 in difference, then you would completely close out the trade. Again, you can set that stop loss as soon as you place that trade. I think it's very smart to have a strategy in place when you actually place the trade and say, hey, this is what I want to make. If it doesn't go in my favor, this is what I'm willing to lose. So picking the strike is very important. Make sure that it's out of the money. Look at the charts, make sure your expiration dates are correct, which are 1 to 2 or 3 or even 4 weeks out. Make sure that you're putting in a low capital amount compared to your portfolio, because you don't want to put yourself too much at risk, and you want to collect that consistent income so you can bring those green soldiers back to the base and basically increase the amount of soldiers that you have working for you. That's the way you're going to be successful with selling put credit spreads. That's the way that you're going to get stupid rich. And again, I'd love you to join the email list in the description. That's all I really ask for you here in this video, because I'm planning to give you guys a lot of value just like I gave you in this video. So if you appreciated, a like would go a long way for me. I'd really appreciate that. And I hope you have a good rest of your day, and I'll see you in the next one.